If you can't, there are more seats in the back. Thank you, thank you, thank you, thank you. If you could grab a drink. Up in the front, so if you guys can scooch. All right. You can seat anywhere, man. Take a seat. Yeah. It's not assigned seating. You guys can take any seats, by the way. It's not assigned seating. All right. Okay. All right. All right. All right. Yeah. Okay. I'm going to start in 5 seconds. Thank you all. Thank you all for coming today. Cool. Hello, everybody. Thank you all so much for coming today. This is the Fintech Startup Pitch Night. I'm one of the co-hosts. My name is Tom Nakata. I'm the co-founder and CEO of Qlay, one of the co-hosts of this event tonight. And I wanted to say thank you all so much for coming to this exciting pitch night with 6 or 7 very exciting startups. So get excited. Before we jump into the pitch contest, I just want to do a very, very, very quick partner introduction, including us. We are one of the co-hosts today. We are called Qlay. And a quick intro about myself. I'm one of the co-founders, and I'm the CEO of the startup as well. But what we do as a startup is we focus on catching interview cheating for hiring. So I'm sure a lot of you have done candidate interviews and for engineers and whatnot, and noticed that a lot of the candidates are using tools like ChatGPT or coding tools to solve coding tests. And that has been a huge problem for hiring. So what we do is we do a lot of proctoring. It's called an AI proctor that basically catches any AI-assisted cheating during remote interviews. We're launching in a couple of weeks, so hopefully you will be there. And if you are a startup founder and tend to do a lot of interviews, please check us out and make sure you don't waste your time, your precious time on cheating candidates. We do a lot of these events on almost bi-weekly basis. We have a little bit of upcoming events here. We have a patent event in Palo Alto on October 1st. We have a patent specialist talk about AI patent, like, if an AI creates something, who owns the patent? Spoiler alert, it's a very hard problem and nobody knows just yet. Second event, this is for SF Tech Week event. We're hosting like a similar type of event as this with people from Google Maps, AWS, and Salesforce doing a lot of expert talk session. And then we also have an agentic commerce night. So if anybody's in consumer or AI Asian field, this would be a very interesting event for you to come and mingle. So please stay tuned. A little shout out to one of the co-sponsors, I guess, which is called OnLab, Open Network Lab. It's an accelerator that we came through, actually, and they invest $100,000 at a way lower equity stake and they are a pre-seed accelerator. So if any startups, if you're interested in a very friendly accelerator, please let us know, and I will be happy to make an intro. Last but not least, this is a slide that we always have. So we do a lot of AI proctoring, but we do a lot of hiring like services as well. So if you book a demo through this QR code in the next 48 hours, we do heavy discounting that equates around to 400 engineering hours for free. So if you're trying to get something done real quick, just book a demo and see what we have. So yeah, or go to qlay.ai/talent. Oh, dog. All right. That's it from me. I will give the mic to a quick introduction by Yuta, and he will be representing JCB. So please give a round of applause to Yuta.
Thank you. What do you think is the hottest topics in Japan right now? It might be sushi, or maybe Nintendo Switch. No, the real answer is payment. Surprisingly, over 60% of payment in Japan are still made in cash. This is a big problem in Japanese market. As you may know, in the United States, over 80% of payment are cashless. Credit card, debit card, contactless solution, and digital wallet, and more. But in Japan, consumers are still relying on cash. In other words, there is a huge potential in this market. At the same time, it's a great opportunity for you to expand your business into Asia. So, what's the best way to solve this problem? The answer is JCB. JCB was established in 1961, and we have been developed a lot of products: credit card, debit card, QR code payment, and more. So as of today, we have become global payment brand. JCB has over 160 million users worldwide. More than 130 million users in Japan, which means almost every Japanese consumer has a JCB product. On the merchant side, we have a network of over 56 merchants worldwide. This scale makes JCB one of the most trusted and influential payment brands in Japan and across Asia. We have 4 main domains: issuing, acquiring, processing, and branding. So, now, let me introduce our new solution. This is called JCB NFC tag. As you may know, NFC is extremely convenient. NFC tag allows users to connect to e-commerce site very quickly and easily. So we believe that NFC can be a game changer for Japanese market. That's why we are here today. We are looking for an innovative partner who can integrate your service and product with our JCB NFC tag. It could be an AI company, a SaaS company, or simply anyone with a great idea. In the future, let's collaborate with us to expand your business and to solve Japan cash problem. We are looking for an innovative partner today, and if you can possible, you bring your service into Japan and Asian market. Lastly, I'd like to introduce our team member. I am Yuta, head of the Silicon Valley office at JCB. And my colleague Hayato, Assistant Vice President, is also here today. We are looking forward to meeting today during networking time. And yeah, and I have last one announcement. We are hosting another event this Friday with biggest other payment company in Japan. Yeah, so please come join us. Yeah, thank you.
Right.
Hello? Hey everybody, I'm Dev. I'm going to be emceeing today. Yeah, thanks. Thanks for coming, everybody. So yeah, I'm the founder of Startup Intros. I'm also an associate at Context Ventures. Yeah, so I work with Qlay a lot. We work out of the space. We love the space. And DG has really been a great place to work out of. So a little bit about context. So we invest in military veterans. That's like our main part of our thesis. A lot of funds have niches, and we really have a lot of founders in AI, fintech, and defense tech and dual use. And then Startup Intro is an incubation out of context. And basically what we're doing, you just move this slide over. All right, so I'll talk a little bit about what we're building at Startup Intros. So it's an AI fundraising platform. So our goal is we found that the fundraising process is really difficult, right? Like a lot of you don't know what you're doing. It's okay. Everyone started out that way. It's really hard to get VCs to pay attention to you. Big issue, right? And then, yeah, fundraising is a big headache, especially if you're trying to build something that requires money and you can't, vibe code it over a weekend. So what we're doing is we're trying to build a platform that solves a couple issues. So one, it gives you an AI-powered database of VCs. Think like a Crunchbase, but works for what your startup is doing. It helps identify the VCs that are going to most likely invest in you. We're going to help you match up to the ones that are going to work out, and then help you reach out to them. So it's also like a smart CRM where it's like helping you reach out to the right investors and then stay on top of what's going on in your LinkedIn and your email. And then whenever you get a reply or you don't get a reply, it'll help you follow up. And then we're also helping you eventually, after you're done raising, then stay on top of your competitors. So the platform will figure out who's your competitors, what are they doing, if they're raising, or if they're launching something. And then lastly, we also want to implement accelerator matching, as well as helping you easy apply to accelerators or apply for grants. Yeah, so this is a little bit about us, but yeah, so we also have some cool events coming up. We're gonna be doing a launch party for our service next Monday, and then we're doing a Tech Week event for helping you understand numbers. So a lot of founders don't know their numbers. And the whole point of this event is helping you improve your operations through metrics. Then November 6th, Context, we're doing a defense tech and dual use conference. So we're gonna have a lot of funds in the defense tech space or dual use space. And there's a lot of a lot of founders. And then lastly, we're doing an early stage summit on December 6th. And that's a full day event where we're getting together early stage investors, founders, as well as tools for builders. So think like Notion, Vercel, that type of stuff. So we're gonna have founders talk about how to vibe code, as well as how to get your first check. So all those types of questions. Then in the meantime, what we're doing to really hone in on our AI is we're gonna be doing a service. So how it works is basically, it's a 3-month program. I will help you go from, I have no idea what I'm doing in fundraising, to improving your pitch deck so it's ready to go, giving you an elevator pitch that you could practice, as well as holding you accountable for 3 months. And then we're also gonna then build a targeted list of investors, just like you would if you were going to sell. We're gonna do outreach, and then it's just hitting the outreach. And then lastly, once you do get the meetings, I'll practice your pitch online, so that way you can hone your pitch before you actually get on an investor call. So we're doing this right now just as a pilot program. It will be heavily discounted, but that's just to make sure that we get serious founders in the program. And then eventually we'll be able to launch our app in a couple months. And then the learnings from this program are going to go right into the app. So feel free to apply using the QR code. And that's all I got. So I'm going to transition into pitch night. So basically how it's going to work, we're going to have 7 startups come up. There's a specific order, but before we do that, I want to also introduce the judges. Full screen. So if you all want to come up, feel free to stand up and then come around. And you can walk onto the stage, or you can just walk in front of the room. Yeah, whatever. Here, let's have you come up and talk about, yeah, it's gonna fun.
Hi, I'm Hayato Takasaki from JCB, Silicon Valley office. I'm based in San Mateo, and I'm also together with the Yuta. And I'm very happy to connect with the startups or the companies who's interested in fintech or AI or stablecoin. So these kind of companies I'm interested to connect with you. Thank you so much. Yeah.
All right.
Yeah. Hi, my name is Ko. I'm currently heading Silicon Valley office of SBI Group. Quick overview, SBI is originally from SoftBank. We are the SoftBank investment at the time, but we spun out in 2006, and we are currently fully independent and listed on Tokyo Stock Exchange, and we are like kind of fintech giants. We have more than 700 group companies under SBI Holdings, and our SBI Securities, which is the largest online brokerage firm, accounting for 50% market share. And we recently made joint venture with Circle, introducing stablecoin to Japanese market as a first financial institution. Also, we are a partner with XRP, one of the largest external shareholders. So we're very into blockchain payment solution. And myself, I'm currently running early stage focus fund in the US. So I'm happy to connect with a lot of founders and venture partners. Thank you.
Hi everyone, I'm Millie. Nice to see you all. I'm with 65 Equity Partners. We're a $4 billion global fund. So invest across Asia, Europe, and North America. Spun out from Temasek, which is Singapore. And we're broad investors. So outside of tech/fintech, we also invest in healthcare, consumer, business services, industrials, basically all the categories except for real estate and oil and gas. So yeah, looking forward to hearing the pitches today, and would love to connect.
Hi, good evening, everyone. I'm Naoko from E12 Ventures. E12 Ventures is an early stage venture capital based in Silicon Valley, like down south Menlo Park. We are interested in the opportunities between seed to Series B, primarily like with the ticket size being averaged around 2 million. We are tech agnostic investors, although like fintech is definitely one of the core pillars we are looking into, other than like healthcare tech and AI agnostics as well. So yeah, we are very looking forward to the startup pitches like after this, and very good luck for the founders, and very much looking forward to connecting everybody too. Thank you so much.
Hello, everybody. My name is Belmer. I am I'm design director at the Wells Fargo of Innovation. So I work at the horizontal challenges across the different product groups to try to identify like what opportunities about how to get there. I have more than 20 years of experience in innovation, from like consulting, like IDEO and Reality Lab at Meta and other places, startups. So my sweet spot is really like it's kind of a 0 to 1 and bringing like identifying like the product aspects and the consumer without a lot of data to support. And also we at Wells Fargo have a partnership group for emerging tech that like we get like maybe a little bit more established startups, like we partner with them to help to develop proofs of concepts and try to figure out if there's a really opportunity there or not. Thank you very much.
Hi, everyone. My name is Shail Kaveti. I'm a partner at an early stage venture fund called the Founder VC. We invest in pre-seed and seed stages in vertical AI. So anywhere where founders are using AI to solve a particular problem, that's what we invest in. And we're based out of Bay Area and Seattle. I have a background in engineering and then worked in high-frequency trading and then in B2B SaaS in Fintech. So looking forward to hearing all your pitches and connecting in networking. Thank you.
Hi, I'm Lavanya, part of Visa Ventures, the venture capital arm of Visa. I guess I might have heard of the company. So we invest typically in Series A to C, but we've invested across the board. Our investments are both strategically and commercially driven. So happy to listen to different startups in the fintech space. Even if investments do not work out, we're happy to connect teams to our relevant partnership and growth teams as well.
All right, thank you to all our judges. So now we'll get on to the pitch night. So everybody gets 5 minutes. We're gonna have a timer over here. So there's gonna be a little ding at 1 minute left. So be mindful of your time. And then at 5 minutes, we're gonna cut you off. And then we're gonna have 5 more minutes for questions and answers. So remember, if you go and you can't get everything in, they might ask it as a question. So you don't feel like you have to put everything into your 5 minutes. Yeah, let me just make sure it works. All right, awesome. So I'll have the first company come up. It's Urin, and your time starts as soon as you get up there.
Right. Good evening, everyone. My name is Harish. I started my career here in Bay Area with building financial data platforms. About 10 years ago, I bought my first house in east of the Bay, which appreciated over $1 million. Looking to tap into this equity, I saw most of the HELOC providers only give tens of thousands of dollars for quick expenses. But for larger amounts, I had to go to 60 different lenders, credit unions, and banks and get a substantial amount. Finally, I pulled it through and bought my second house in Austin. But when we look around, we see that, when we look around, we see that there's so many of the house owners, they are tapped into the parking. So when we look around the Bay Area, there are so many house owners, they're locked into these low interest rates. So I started helping them out, get this home equity the way I did, and start investing with me. So I started my own real estate fund, which is now doing about $8 million in assets. But nationwide, this is a huge problem. 20 million house owners are locked into 2 to 3% low interest rates with no option of cash out or refinance, while house prices are record highs. The reason for this is there is no automated way to originate and underwrite non-QM second lien loans. It takes more than 2 to 3 months to really close and get your funding. But this segment is now opening up. Figure, which IPO'd this month, is a home equity lender which has a blockchain liquidity play. But the real gap here is the 80,000 plus lenders, wealth advisors, and fund managers. They need the infrastructure to really get the easy way to capital of this home equity. That exactly is what Urin is solving. We are rewriting every step of this model with AI. So this whole 3 months process is just shrunk down to just 1 day. So what we are giving is a huge liquidity, like $250,000, $500,000 of liquidity to wealth managers and fund managers. So that's a strong network which they would be getting in. And well, all the competitors, they are after direct to consumer, chasing low value HELOCs. So we are the only one operating in this 30,000 strong network of RIAs, wealth advisors, and this is a high trust network, and we are the only one tapping into these high value deals. And running a fund ourselves for about 5 years, we are tapped into the prime markets of San Francisco, LA, and New York. The real estate lending is a huge market with many niches inside it. We are starting with home equity and unlocking this with our AI, and soon move to the adjacent vertical of multi-unit. There, the deals run 10, 15 million, which is a very high margin, and no one is playing there. That's where we are after. The way our model works is we make revenue in 2 streams. One is the origination fees and a recurring loan servicing fees, which is used when lenders and other wealth advisors use our platform. And the way we build our moat is both through distribution and technology as we cover more cases. So we like to be a platform like Klarna for asset-based capital. We are raising $2 million in pre-seed. We already have the fund committed, and we are talking to strategic investors for filling the round. We are currently in Foundation Capital Accelerator. Our demo day is tomorrow here in SF. So if you are an institutional investor or a VC in FinTech, I'd love to get you an invite. Thank you. And time.
Thank you for that presentation. Just a quick question. What's your go-to-market wedge? Who are you targeting first?
Yeah, our go-to-market is the 30,000 network of wealth advisors, RIAs, and fund managers, REITs, and then other asset funds. So they are the network which has they advise family offices, high net worths in LA, New York, and Los Angeles, where they are high net worth, which has to tap 5 to 10 million in assets. So our proposition to them is, look, we're going to get you $250,000, $500,000 more liquidity through assets which their portfolio is having. That's our advantage.
Quick question. So I understood your strategy is to make it a AI native lending services. That makes sense in a way that that is very cost efficient way. On the flip side, this lending space is a heavily regulated space, and how would you ensure those trustability and credibility of your AI?
That's a good question. So the way we are getting the capital is directly through asset-backed funds. So we are currently working with 2 of them. Optimus Capital is a New York-based fund. They are giving us a good rates. They have a $150 million fund to deploy across the second lien positions, commercial and residential. And also we are partnering with First Federal Bank. They are operating in 42 states, then they have the required license. So the way we work is we are a third-party originator. So it's their credit line, and then what we do is we are just the AI platform to enable that. So we originate, underwrite, and close the loan, and pass on the balance sheet to these lenders. So they hold the risk, and we charge mainly for all the AI infra they would be using. Does it make sense?
I think that makes sense. Maybe the link I'm trying to clarify is, right, you're the tool, you actually underwrite yourself, right?
Correct.
So you underwrite the risk, and then that risk is then taken off the books via First Federal Bank Optimus Capital.
Correct.
Where do the customers come into the equation?
Yep. So the customers would be the high net worth individuals, family offices. So they already have second houses or other investment properties. That's where we would be using wealth advisors saying look, you have 4 properties in LA or in Dallas and other places. We would be getting them, reach through this wealth advisor. So they are the consumers. We are more, you can think B2B2C play.
I see. So you're basically providing an additional product that the wealth advisors can go to their customers
Yep.
with,
Yeah.
and say, we can get you this level of liquidity, this additional dollars.
Correct.
Okay.
Yeah, because wealth advisors already have a product like that for stocks. Say any VP or any pre-IPO folks, they are sitting on 10, 15 million stocks. They can easily lend. They have the products to get in, but there's not anything on the asset side. Say one would be sitting on a 15 million property in Florida, for example. So there's no way to tap in and then get $1 million out. That's what we are feeling.
Can I ask if First Federal Bank and Optimus Capital are already underwriting these kind of loans and you guys are just making the process more efficient, or
Correct.
is this a new undertaking for them?
So First Federal is already doing it, and
Okay.
they have a team of mortgage loan officers and underwriters. And we are able to cut down that from 2.5 months down to right now 24 hours, 24 to 48 hours. So there's already the process in place. We are making it much faster and without much human help. That's a proposition.
Okay.
Yeah.
And I know you guys are still young, but do you have any stats on the risk profile of the loans you guys underwrite versus what they were originally underwriting?
Yeah. So currently we are following the underwriting models which they have.
Okay, so you're using their
they have
underwriting.
correct. They have 65 plus parameters to see like what's the DTI, what's the LTVs. It's the first, if it's a primary house, how much it is, secondary house. So we are using those model. And Optimus, they are fairly open for that. And we are using 2 more models depending on the market. So primarily we are trying to keep that limited. Whichever they are comfortable, we are tagging along.
Thank you.
All right, thank you so much. Let's give him a round of applause. All right. All right, so the next startup is going to be Sarah. So
everyone. Thanks for coming tonight. Hi, my name is Fong. I'm founder of Sarah. Sarah is basically a financial wellness platform, and our main focus is going to be credit card debt. So you might notice this, but the U.S. 2023, the U.S. has surpassed $1 trillion for the first time in history in credit card debt balance. Yet U.S. only have 68% penetrations in credit card. Japan has 69%. So, but the U.S. credit card debt is highest in the world because the way that people are spending money. It's the consumerism, the lifestyles, and the ease of getting credit card that contribute to this problem. So we have a solution that is quite different from anybody else. We're going to address not only the credit card debt at hand, but we're going to have you using AI to prevent further debt. So we're trying to address the root cause of debt, which is the spending habit. This is stats that most people know about U.S. credit card debt. It's the highest. And then, there's only 2 legitimate ways to get out of credit card debt. If you have $6,000 credit card debt at 22%, your minimum monthly is about $190. The first way to get out of that faster is to pay more than $190. Unfortunately, in the U.S., there's 21 million Americans who cannot do that. They only pay the minimum monthly payment. If you pay minimum monthly of $6,000 at 22%, it will take you 24 years to get out of it if you don't add any more to it. If you don't add any more to your debt. That's the other problem. Second way to get out of debt is to refinance. So the majority of the solutions in the market today are debt consolidation loans. Look around you. There's SoFi, there's bank that does debt consolidation loans. However, the 34% of the US population who live near or below poverty, they cannot do that. Why? Because you need good credit. Once your credit utilization is higher than certain amount, your debt to income ratio, you're not qualified. So there's 34% of the US population that will never be able to do number one, nor number two. Okay, so they got stuck. There's nowhere else to go. What we do is we use a methodology that based upon what we call an offset principle. Does anybody here know about an offset account? Raise your hand. No? Nobody. Okay. The offset account came from UK. It came from, so UK and Australia is the only two countries that has this offset, using an offset principle. They use money in the checking account to offset your mortgage balance. We use the same principle, but instead of offset your mortgage, we use the money in your checking account to offset your daily interest calculation of your credit card debt. Very similar. The AI does all heavy lifting. Realize is that they basically will be able to pay faster without any extra payment. They pay faster without any other loan. What does it help people with? It helps people stay on track to get out of debt. But we want to use AI to enforce the budget so they can prevent further debt. I'm not going to go through any one of these, but these are the features of enforcement. We look at your budget. We create a budget for you. We help you trim your budget. We help you rebalance your budget. You may use more in one area than the other, rebalance it for you. And when we find that you're short of money, we'll recommend you ways to increase your income. This is an example. This is a real life experience. We have been onboarding about 3 to 5 small businesses. And we're also onboarding about 5 nonprofit organizations locally right now. We have a lot of inputs from them. This is the real life use of all these people. The way we work is that for every $10 that I save for people, we'll keep $1. So people actually making money coming to our platform rather than losing money. So it's affordable even for the lowest people on the economy scale. Our market potential is quite large, even at minimum a $10 minimum monthly. We average save people $15. If you think $5 does not make a huge bunch of difference, you add $5 to your monthly payment, you shave off your payment period by 5 years.
Thank you for the presentation. From my experience, one of the main challenges was about a rational understanding of a lot of emotional and behavior change. How are we addressing that part?
Okay, all right. This has come up quite a lot, actually. We're not changing any behavior. People are going to shop no matter what. People are going to spend no matter what. What we're doing is we help them making a better spending decision. Okay? If you go to the supermarket and you have ahead of time the visibility of if I spend this on this brand versus this brand, this is how much I'm going to save. But that might not come into mind unless you show them graphically how this can impact the overall finance. So here I have a chart of the debt, of the total financial problem, one of which is debt. And they can see if this decision can make a difference in X number of interest that I'm going to save, as well as the X number of time that I'm going to cut off with using my payment period. That will help people make the right decision. And by the way, you folks probably might not have visibility into the buy now, pay later, which is another time bomb. People get into it not knowing how much they can afford. This all becomes visible in our platform. And that's what we do. So we don't change the behavior. We help them do the same thing smarter.
Our perspective. If I'm utilizing this tool, what do I need to do? Do I need to enter in sort of spending activities I plan to do? Or how does it work?
But so when people sign up on board, we're going to ask you to connect your checking account and your credit card that you had debt with us. From there, we use Plaid to extract all your expenditure for the past 2 years. From those data, we're going to build you a budget. Real budget. Not something that you want to have, something you already do. And from there, we're going to figure out 2 things. Number one, we're going to figure out exactly how much money to transfer. Remember the offset principle? We detect that you have certain amount of money in your checking account. Instead of letting it sit there, do nothing for you, we transfer the monthly credit card transaction amount, MCXA. We move the money you're going to use through a credit card, but you haven't used it yet. Sit there in your checking account. We move that MCXA safely from your checking account to your credit card balance. That's how you pay the same amount of monthly payment, but they go up to 55% cheaper and 74% faster, all by itself. Okay? Next, we build up your budget. We're going to enforce it using those 4 measures of enforcement: trimming, balancing, credit leveraging, and income boosting. Have more and more profit at the end of the day. That will also, by the way, help boost your credit score. Another thing that the credit score is credit card, another thing too. For the credit card issuers, the US has experienced about 12% default rate. Japan, 6%. Default rate, they're using they're practically 0 default rate. Why? Pay this structurally out of that faster. By the way, there's 2 other shortcuts, right? There's one shortcut that people use is debt settlement. The other one, bankruptcy. When people use shortcuts, everybody loses. We prevent that as well.
Well, how do you measure the dollar savings? Like, what is the baseline at which you can measure against?
Easy. So from the data, we have the amount of debt, the interest rate of the debt, factor in how much you pay. We already see that in the past. We know exactly your trajectory. So we know exactly how much you're going to pay. How long it'll take you to get out of debt, how much interest you pay. In our offset principle, we can calculate how much time you save, how much money you save based on your previous experience. And we graphically show it to you. So people see readily visible exactly what they have. Well, now.
So I want to better understand like the novelty and also like the differentiation factor in this model. So you mentioned, you touched upon this like offset account perspective rather than like a behavioral changes enforcement. What do you think really is the kind of a strong push for the users to choose your service out of those like pretty getting crowded wellness financial management services available in the market?
For those of people who live near or below poverty level, there is no other choice. The debt service landscape has never changed. You either pay more or you refinance. Unless you want to do shortcuts. When you do shortcuts, the card issuers will lose and you will lose. So if you want to pay more or you want to refinance, you need to pay more, then you need to make more. If you want to refinance, you need to have good debt to income ratio. You need to have good credit. Neither one of them is available to those who live near and below poverty level. There's no other choice. So we are the only way that can get out of that faster without any loan or extra payments. So that's clearly the only thing left. So. Thank you.
All right, guys. Thank you for having me. I'm Helena, CEO and co-founder of VeriSense. So what is VeriSense? VeriSense is an infrastructure and a application. So it is a agentic network that actually truly enable agent interoperability with autonomy and then trust. At the same time, at the application level, it is a very interesting C2C agentic creator economy platform that where the agent creator can drop your agent, monetize it. At the same time, user can discover and trust agent and pay for the agent. So let's look at what are the agentic network means. Essentially, basically that we see that human networks is designed for human. It was never really designed for agents. However, if we look at that most of the agents are already quickly evolving from the chat box, right, to this part, and then now lots of agents at this area. If we really want an agent have a major leap forward to the next stage, it requires a agentic network. That an agent can talk with agent can talk with a human, agent can deal with the assets, and the agent can use all kinds of external tools. So let's look at that. What is the agentic networks? Or what is VeriSense is really building up for here? There's a couple things. Of course, we are a protocol. That means that we enable the agent to deal with the external tools and each other, human and assets. At the same time, it's also have a couple critical components to realize this vision. And then we also offer a really rich agentic resource kit so agent creator can easily build agent and drop into the market. So I'm not gonna get too much of the architecture or technology. Let's go straight to the real stuff. So you guys are gonna think about it. All right, you have a network, but how are you gonna gain the network effect? Who's gonna use that, right? We believe application owns the relationship, and then application is where money comes from. And that's how we start a network effect. So we built the census space. This is actually tackling a massive yet untapped market, C2C agentic market sector. I'm sure, in this today's pitch, you will see all kinds of projects, right? Mostly at the B2B or B2C markets. Where's the C2C? Why it's untapped? Obviously, there's something missing. One is because the creator, especially the individual or small teams, they lack of the resource, they lack of the tools to go to market or just monetize it. And then at the same time, user lacks the transparency and the trust, especially when they need to use the agent that are supplied by the individuals out there, which has no business entity to back it up. So that's why we need to use this agentic network to offer this level of discoverability, matchability, reputation, and then traceability of agentic behavior. Okay? So let's go straight to next page. This is a little a week's tractions. In terms of the developers, the agent deployed, and then the users. And also, we're seeing that the revenues. The first month we launched the product, we're seeing the revenue. And ever since that, we see the 3 times a revenue growth. So this is a little bit numbers. We have some partnerships like Google's and Coinbase. We also have 10 outreach channels to get the creators. This is a little bit about our fundraising situation. We closed the pre-seed round, raised $1 million, led by Google and then a famous Japanese fund from Web3. It's called Taisu here. And we also got some angel investors from the Web3 protocols. And that's us. We are a team, with mixed experience from AI, cryptography research, and AI, the blockchain. Our academic background spans from Stanford, Dartmouth, and Tsinghua University. So that's a little bit we're having. I actually have 1 minute left, so I'm just gonna play a video over the product. Is that okay? So in this video, we're gonna show that you as a user come to Census Space, tell what you wanna do. Say, hey, book a trip from San Francisco to New York City from August the 10th to August the 15th,
Hi,
right?
we're Very Sense, a team with deep expertise, city, budget, dates, preferred activities, etc. Confirms user identities for reward eligibility. Now, let's take a look at the demo. This video demos Sense Space using a travel planning scenario. Just type your travel requirements in natural language, your destination, departure city, budget, dates, preferred activities, etc. Sense Space intelligently finds the right agent for the task. Here, it's Travel Concierge.
So it's the system agent Katrina using the network to find a travel concierge.
The agent searches and books options within your budget. After you pick your flights or hotels, it helps complete the payment and booking.
And in our systems, that most of the agents are more than the ChatGPT wrappers. They're able to do something like book tickets, process the payments. Here,
also helps
that
to plan
shows
the
that it
activities during
already
the trip
booked the
according to your
hotels and the
input.
flights, right? And let's say, hey, I want to kind of share the itinerary with my friends. Bam, it finds a PPT generator, another agent. Or you will say, hey, I have a kid, traveling with me. Find a babysitter and then prepare the kid's packing list. Bam, it finds that. We have the agents that with all kinds of interesting use cases. So for example, convert your resume from Chinese standard to English standard for a better matchability of the job from Silicon Valley. For example, there's an agent to help you to spill the secret crush, and then confess your love to the girl you like, or open the heart conversation. We see the agents doing all kinds of things, all through the agentic network. That's it. Oh, thank you guys. This gentleman, please.
Thank you for presentation. Really nice demo, and yeah, I think in this demo, agent will make a payment by themselves.
Yeah, so
as well?
here it's just a kind of the fake scenario. We are looking for a agentic protocols. We're in the pipeline with Coinbase. But I understand here there's a lot of payment-related VCs like MasterCard, JCB, and Wells Fargo, right? We're looking for a lead investor in the payment industry. You invest on VeriSense, you invest on the future of the agentic payment.
Yeah, that's great. Yeah, it's a great concept to make a payment by the AI agent with
That's right.
utilizing the blockchain.
Give us 2 more weeks, then we're going to launch the first agent, which is doing a long run booking. Meaning, let's say, hey, I have a trip, in the 30 days, right? And then monitoring the tickets and finding the best one. And if it meets my requirements, go book it. So it's gonna be just like, in the life. Yes. So agentic payment is gonna be one of the most important infrastructure components in the agentic network.
I see. Yeah. At the same time, for the AI agent payment, it's the only one of the big difficulties that to secure the payment. So in that secure the payment or transaction, or in that segment, how do you think about what you want to do for the secure the payment?
I mean, the payment security, right?
Right.
Yeah, so we'll have to do step by step because everything is too new. Right now, we're gonna start offering for agentic payment only. Okay, so we already have the subscription enabled for human to pay for our service. That's in the fiat through credit card, so no problem with that. But for agentic payment, we're gonna focus on the crypto payment based on the stable coin using the Coinbase X402. But then later, we wanna find a strong payment partners to expand it to the fiat payment. So that's why, we need your help.
Thank you. Yeah, that we want to do as well. Yeah.
Thank you. Sir, you're from JCB?
JCB, right.
Oh,
yes.
great.
Thank you. Could you name some competitors in this space, and what's your
Are you from SBI?
Yeah.
Okay, I know that. Let me explain for the audience here, don't have that kind of context, right? So there's another agentic networks called GoKite, right? Founder is a friend of mine. So yeah, what's the difference? When we see network, there is a different level of network. Let's think about the road, right? There is the interstate road. We could be like a city road and then focus on the C2C market. So really, like, I don't think it's a competitive. It's more like, complementing. We can bring our community, which is the C2C agents, with our municipal roads, joining the bigger kind of a road mapping systems. So here's the difference. I think, mostly we're focused on the different application and different market. Yeah, I believe Gokai probably want to go after the enterprise level of the network, right? Yeah.
That sounds like the creating and establishing the ecosystem itself is a core key first step for your success. And then what's your kind of like roadmap to ensure that, like, and what kind of like incentives do you provide for those like a capable independent agentic developer?
Yeah, that's a really good question. Let me quickly finish this one. There's 1 more minute, right? Yeah, so network effect and how do you go to the market, right? As I mentioned, we actually established a few key critical partnerships with Google's, right, and Coinbase. At the same time that, we also go after some developer communities through hackathons. So for example, the kind of 200 like agents we find, we spend zero marketing dollars. We go after all kinds of hackathons, telling agentic creators, hey, you want to drop your agent into our marketplace and possibly make some money? They all love it. And then in terms of the larger scale of the go-to-market ecosystem development, here's what we're going to do. We will have a incentivized growth plan that the better quality of the agent or the agent being used more often by the user, this agent creator is going to receive more money or like, the token incentivization from our system. And at the same time, those creators, of course, receive the money from the user as a typical creator economy revenue stream. Yeah, so that's how we do that. A creator in our platform can receive 2 types of income, from our system and from the users. Oh, thanks.
We're going to have Adam now from Numix.
Hey, good evening, everyone. My name is Adam. I'm the CEO of and co-founder of Numix. We are building a dating app for AI agents. Kidding. I wish. I mean, given that the landscape has so many AI agents nowadays, we should do that. Thank you for the previous presenter for showing that. But in all seriousness, we are actually building an AI-powered accounting for a deep tech or hardware company. And why is it deep tech and hardware company specifically? Let me share 2 stories to you, professional and personal. Meet Wes. He is actually a CEO of a robotic company. And when we're taking over his books and finance, we actually figure out that he actually left $30K of R&D credit unclaimed. Underclaimed, should we call it, when we take a look. And the reason why, and not to mention is that he actually proactively already very engaged with the space with AI product and especially in the fintech and financial accounting space, leverage the leading software provider doing that and service provider doing that. And the reason why is that it's actually very resonate with my personal story. I'm 10 years in as tax professionals, and when I was working with founders all over the world, I saw this pattern over and over again. Founders get generic and general answers. The type of generic answers that they can search on Google, I mean, nowadays, ChatGPT. And it's always on the shallow surface when they come to us for advice, and no one was able to give them a much more deeper playbook that they wish they always had. And hence, that's why we're building Numix. Hence, that's why we're building Numix. And I'm ex-EY, ex-Kata, and also backed by Berkeley Skydeck from my previous company. And same thing with my CEO, Helene. She was used to fund owner of Zen Associate and AI CPA and RS certified. And my CTO is actually also what we met back at Berkeley Skydeck, batch 17. And he's building his company, and now we're building together. And the issues that why the problem is unique. What's the issues that uniquely to hardware company? One is that hardware company average leaving 1 million plus on the table because they have the incentive from governmental from government support to apply for grants and funds. But then with that, they need to compliance in timeline format, for example, from NSF, SBIR, DOD, DOE. And this is only in United States alone. Obviously, outside of the United States, there are much more governmental funds. But then that means they are facing much more governmental scrutiny. And second thing is, like I said, generic tools doesn't fit all. Meaning that most founders, most companies that, service company that when they associate with hardware company, they treat them as edge cases. Why? Because most of the time that they associate with the founder are more in the general side of things. That's why they cannot offer the substantial advice to them. And our solutions, we obviously, as accounting and CFO services, that's just our beachhead. And we want to ultimately become the financial oasis for hardware company. And the way we do that is that keep them in a compliance and audit ready format. So whenever they associate with certain grants, contracts, or anything that has to be customized we'll make that ready using our service, using our AI Plus expert. And second thing is cash control. Hardware company don't have the luxury as a SaaS company that can go revenue right away. So they have to be conservative with their spending. And for us, we want to come in and tell them how to manage cash in and cash out. And third thing is that real-time reconciliation. This back in the day, usually doing what they call books close and month end. I think with the modern day technology, with it's so abundant available, I think we are able to reconcile in a timely manner. And last but not least, I have 1 minute. We have instant response. I mean, let's just be honest. No one wants to touch accounting or the back office end of things. They just want to answer, get in, and get out quick. And we do that for them. And right now, like I said, we service phase one, and we service that. Our ACV is typically about 13K. We offer bookkeeping, tax returns, tax credit, and payroll. We have 300K ARR right now, and 22 customers working with us, 30 more in the pipeline, looking to hit $1 million by 2026, Q1 2026. And the product roadmap, it's already robustly, we're trying to, like I say, make sure that most of the compliance items are aligned with, and also the revenue side of things. And how big is the market? According to IRS SOI links, there are about 1.8 million of C Corp registered last year, and about 180K of them is hardware. But our current ACV, our sum is 2.3, and obviously. But I'm just going to touch base really quick with the competitor space. So obviously, like I say, AI native, they're more software specific, and also more service, also more, not outdated, but like at least more slow in the response. And even with the service and hardware focus, they're still very heavy service space, and we're the first one that in the AI with hardware focus. So last but not least, I want to shout out and kudos to all the hardware founders out there. You are doing amazing things in our physical world, and thank you for doing that. And by helping you, we want to be there one. And let's build something extraordinary together. Thank you. Yep. We have about 4 minutes and 53 seconds for questions. Yes, sir. Oh.
Thank you for presentation. What's your, just quick question that, what's your difference in terms of the competitors?
The differences between the competitors?
Yeah. Right.
So, like I mentioned in the competitor slide, let me actually go back a little bit. So the way we see ourselves is that most of the competitors right now are on the share of services, meaning that they serve restaurant owners, they also serve for software companies, serve deep tech company or hardware company. You cannot use the way that you manage a restaurant to manage a hardware company. They have different needs, they have different, for example, the R&D credits hold differently, even with within the same vertical. And the way we see is that you cannot replicate the whole workflow towards hardware. They have to be AI native build versus twitch it. So, but the way we think about it also in terms of address that question is the network effect. So ultimately, we want to become when the newcomer, either it's established hardware company or hardware newcomer want to get into the space. We want to be building the data network effect from the upstream, downstream, and also if companies that outside of the United States coming here to establish their footprint, we want to be that one as well. And just cover like FYI, most of hardware company founders, they are all at least at PhD level. Reason being that it has to be very domain focused. They don't have the luxury to pivot like the software company do. So they have to be laser focused on building that thing. It's either go big or go home. So hope that answers your questions. Oh, yeah. So the question is, can I talk a little bit about our customer acquisitions effort? So right now, most of the customers that we have is through distribution channel. So like I say, because we naturally connect with Berkeley Skydeck, so we have more resources that connect with the professors and PhD students there, etc., or the folks that want to set up their own startups. But in the future, obviously, with more, like say, advanced, deep tech event, neurotech event, biotech event, aerospaces, that is across the span of the whole year. We're thinking about, we're already done one and covered about 10% conversion rate. And so we're thinking, as those events goes, we want to be part of those. So we're going to set our presence at those conferences, and also, of course, the one referrals. People don't easily trust accounting services or, like say, a service professional FP&A services, but when they onboard, they will never leave. That's kind of another stickiness of that. But hope that answers your questions. Questions? Right. Very cool. Thank you.
Awesome. Now we're gonna have Steve Cash come up. Oh, awesome. Yeah. Come on up. Your 5 minutes starts.
Hi, my name is Dauda. I was born and raised in Ghana. When I was 5 years, I left my biological parents to stay with my auntie. Over there, I helped my auntie to set up her business. And after 25 years of running her business, she hasn't seen any growth because interest rate and high exorbitant transaction fees eat up all her money. Today, I'm building a company called SafeCash. We are building an affordable payments infrastructure for the unbanked using stablecoins. Globally, there are about 1.4 billion people that grew up just like me in a household that depends on just $2 to $5 a day. And so when people like me try to use digital transactions products or digital products, I care so much about how much I'm being charged. I don't care, 3% means so much to me. In 2020, 40.6 million Africans leave their household to live in abroad to better their economic situation. And it will interest you to know that over 100,000 Black Americans, Black people arrive in America every single year. But these people don't have a banking service that is built for them. The bank service works, but it works for other people, not their own bank. In an attempt to solve this, traditional fintechs charge 5 to 10% transaction fees, and there are complex KYCs, which prevent them from accessing this digital product. We are doing something different. We think that transaction fees shouldn't be the only way for people to make money, for digital platforms to make money. We are offering people an opportunity for them to make money whilst being on our platform, use that money to be able to offset their transaction fees. They can simply watch an ad, and anytime they watch an ad, they gain money, and when they get money, they use that to offset their transaction fee. But we don't do only that. we actually solve all the problems that these platforms charge this bank, which is not built for them. We have instant stablecoin settlements. We charge 1.3%, as opposed to even Cash App that charges 3%. It still doesn't work for the bank. You see, last year when I was in the US, I was leaving to Ghana, and my friend gave me 3,700 USD in cash to go give it to his brother. He knew there's cheaper cash, he knew there is Cash App, and he knew about most of the apps, but he still preferred to give me cash because the 3% still doesn't work for these people. 1.3% works very well. We offer the bank a lot of services, from earning yield, connecting to Visa cards, bank accounts, and also being able to invoice their customers. Our platform has CVAP, which is built for the unbanked immigrants, and then the freelancers can access our CIV Plus product to invoice their customers, create corporate bank accounts, and then Visa cards. We piloted this, so we are not saying we are about to build it. This has been built. These platforms are both live on App Store and Play Store. About 140,000 transactions was processed from 300 customers, and that generated us 4,000 revenue. And we still charge only 1.3%. If you do the math, this is us charging a customer. If we were like a regular fintech, we'll be charging the customer 3% to be able to make this amount of money. But we actually charge them very less, 1.3%. And we have about 14,000 users because we started from 2022, and we've pivoted our product to this point. How we make money? We charge 20%. We take 20% off from the yield that the users make, and then we share 50% of the revenue generated from the ads with them, and we charge 1.3%. This helps us to make money just like any other fintech, but we charge the unbanked very less, which makes them prefer our platform. In the next 5 years, we could make a whole lot of money. 42 million is the projection for the next 2 to 3 years, but we will be able to double this money a whole lot more when we expand. We are targeting the US, Ghana, and South Africa to begin with for the next 2 to 3 years. But we would expand to a lot more markets. My co-founders and I, we have technical experience. I was formerly a CTO and also a product manager for Web3 companies. I helped build a lot of on and off-ramp products. I was also a Microsoft Most Valuable Professional for 3 years. My CTO was my former senior software engineer when I was a CTO in my previous company. And Charles and I have been working together for the past 10 years. We are raising 2 million to push this product to be able to reach this 1 million people by 2027. And we want to invite you along because already we have a few investors with us, Draper Ventures and also Stella. And we'll be so excited to have those of you who would want to power the unbank so that they avoid giving physical cash to people when they are traveling back home. It's unsafe. Thank you.
Okay. Thank you for your presentation. We are very interested in stablecoin service. So I have one quick question. What is different compared to other competitor? What is different your service from from other competitor?
Thank you so much for your question. One of the major differentiator is us giving the users the opportunity to watch an ad instead of paying for the fees. And this resonates so much with the unbanked because they start to feel like, okay, finally there's a product that is not forcing me to pay today because I have only $50 in my account. Meaning if they watch ads and accumulate it for a couple of times, they could just use that ads watch to be able to offset the transaction fee. So they don't have to pay the transaction fee. That is a major differentiator. Not cheaper cash, not Cash App, not any of the product does that. But also, we build first-party tools in-house. As engineers, we are so much capable to build a lot of the tools in-house, which makes us avoid passing the cost, the third-party cost that we would have incurred to these customers. So with all that, it enables us to differentiate ourselves from the existing companies like Cheaper Cash, which the name is cheaper but not cheaper, actually. Yeah.
And thank you for your presentation. I have more two comments than questions. Like, first, it'd be nice maybe to talk with Sarah too, to maybe think about wellness behaviors paired with using the money, because that's especially important for that particular segment. And the second one, like, did you look at foundations for funding? Like a lot of grants are provided for this particular, especially this segment of unbanked and like a poor segment. I think it would be a nice way for you to get this $2 million.
I missed the last part.
If you look at those foundations, like that provide grants, like the Pierre Foundation, like a King's I forgot the name, Knight Foundation, and or Melinda Gates Foundation, like they provide a lot of funding for this kind of space you're working on.
Yeah, thank you so much. And I think, to be very frank, we've been building Safe Cash for 3 years. We started from 2022. We started as a wealth management, platform, and we still had to sustain our team and our operations. So we were doing part-time with other Web3 organizations, building their product for them as engineers, until the last 4 months, when Stellar gave us a grant of $200,000 USD. I think it was around 140,000, and subsequent grants came through, which made our team to become a full-time team in-house. And that helped us to rapidly build almost all the features I'm showing here was built in the last 2 months, actually. So we understand what empowering a team with the right resources can do. And that is why we also are very interested in partners who can push us to the next stage. So it's not just about even getting the funds, but also having partners that really believe in our vision and can share their wealth of expertise with us.
So you mentioned your customers like traction, $4,000 revenue and transaction amount. I feel like this is little weak revenue model, having like 14,000 users but making 4,000 revenue. Have you ever thought about this revenue model?
Sorry,
So it's like I don't feel this is a strong revenue model.
Okay, great. Thank you. Thanks for your question. So I think if you look at the revenue model over here, various apps or companies, they only charge transaction fee, and it's around 3%. That's how they make money. Our revenue model is stronger than what they are charging. Because when people watch ads, and like I was mentioning, this amount that we made over here was piloted to only about 600 users from our 14,000 users. We built it in Ghana, only in the Ghana market. So this wasn't cross-border payments, right? And I was showing over here that all these features was built in the last 2 months and is ready for the US market. Actually, we pushed it last week for people to be able to use it in the US market. So if you base on this, yes, it would seem that this revenue is not strong because we piloted it with just a small set of our users in Ghana, and that was on the just in Ghana for the unbanked market to understand whether we'll be able to generate money from ads, whether these users would actually watch the ads when we put it before them, and then how to get a better quality ads for the businesses. So this revenue model is actually stronger than most revenue models that probably would be shown. Yeah, thank you.
Can I clarify, is your current customer base entirely Ghana?
Yes, so these customers were entirely in Ghana. And like I mentioned, we started in 2022. So these customers followed our journey when we were building our wealth, app and stuff like that. Until earlier, late last year, when we partnered with Stellar, when they gave us, they admitted us into their program to run on their stable coins. And then we built a peer-to-peer payment to test some of the revenue models that we were thinking about with these users. So we only picked a small set of them to test this with them. So they are based in Ghana, yes.
Is it Ghana in America or Ghana in Ghana?
Is it Ghana?
Like,
Sorry.
are these
Okay, maybe I think
Ghanaians
you're
in
talking.
yeah.
I understand you. So currently, we are actually targeting the unbanked that are living in America who wants to send money back home, right? And that is why we have two products actually, CIF Plus and then CIF App. The CIF Plus is made for people in Africa wanting to receive money from those who pay them in the US. And the CIF app is built for the unbanked immigrants living here and those who are living back home to be able to. I can actually demo every single thing for you to see how it works.
And you're acquiring customers via ads, or how are you acquiring the customers today?
Yeah, so a second here. Sorry. So we have some partnership with organizations like Prodigy, who have about 50,000 to 100,000 trainees. They train people on Web3 how to build on Web3 and stuff like that. We did a partnership with them so that we can onboard a lot of users from them. We are also talking to a few other foundations that for example, the African diaspora community, be able to partner with these people. So our customer acquisition is based on some of these partnerships that we run. And then also we attend a lot of events. Myself, I'm a sales guy. I pitch to a lot of people, whether investors or just users who want to try out our products.
Yeah, the reason I ask is because I actually think it's a very interesting model, right? And one of the things that you'll run into, and I think one of the judges already asked about this, is the idea that is the market limited? And I know you probably recognize this because you had this slide on this is a TAM of what we can address currently, and then the TAM of all unbanked. I actually think one of your differentiations in the market is your access to the Ghanaian market, right? That a lot of people may not have. And so if you very carefully track, what your customer acquisition cost is to get these potential customers within your network, I actually think the growth trajectory here is to build more products that serve that population. Because I think your ability to really target, attract that population is one of the key differentiators that another fintech platform is not able to do, right? And yes, the market is limited, but I think you have an edge in being able to target this population.
That's absolutely true. Thank you so much for sharing that insight. That is something we've thought in line with, and I think it resonates so well. Thank you.
All right, awesome. Next, we're going to have Dolphin Eyes.
Thank you, Dawood. That was an inspiring presentation, so let me follow that. Hi, good evening, everyone. My name is Titi, and I'm the CEO and co-founder of Dolphins. You can call it Dolphin Eyes, Target, Tarjay, who cares, right? You can call it whatever you want. We are building contractor payroll rails without borders. Today, half the world's workforce are contractors and freelancers. About $1.5 trillion is paid to them annually, and this number keeps growing, but payroll hasn't kept up. Companies lose about 7% of their payroll dollar to delays, hidden fees, poor FX rates, and that's $90 billion wasted every year. Teams have to juggle between different tools, systems, bank accounts, and wallets just to make one pay run. And contractors, they want to get paid the way that they live, in their local currency, in stable coins, in Bitcoin. Well, who doesn't want Bitcoin, right? But the legacy systems, they don't support that. How do I know about this problem? I lived this problem for many, many years, and I'm the one who used to juggle between tools to make payments to my global team. And that's why we built Dolphins. Employers and businesses can pay contractors without juggling tools. So no wallets, no exchanges, no headaches. Contractors, whether it's fiat or crypto, they can get paid the way that they want, in the currency that they want, and the percentage that they want. So they can even invest through the tool. We replace legacy rails with blockchain efficiencies. We make money through a subscription base and a payout fees, and we also have custom white label partnerships for white label partners. We are live, and we have 2 users that are paying across 8 different countries. We have a white label partner, which is a gig worker platform in Africa. And we have a pipeline of 44 companies that are paying a minimum 5 contractors across borders. And we have 2 partners that we're talking with. One is a platform in India, and another one is a platform in Canada. We are live across different fiat currencies and crypto, and we are adding more and more on and off-ramp rails. The contractor global payment space is $2.5 trillion in total addressable market. Looking only at the highly fragmented contractors, that's about $375 billion. And we are looking into right now the businesses that hire independent contractors and crypto native businesses, freelancers, and platforms that are remote first and have heavy freelancers. Our go-to-market is in 3 phases. We're looking at the early adopters, which are businesses that are hiring across borders or hiring contractors in general. Crypto-native companies that already know how to use crypto, but they want better accounting and tracking systems. Our mass adopters would be marketplaces and platforms that want the efficiency of crypto, but don't want to deal with the complexities of crypto. And eventually, we will partner with infrastructure partners that will embed our APIs. There are many platforms that do payroll. What makes us different is what I illustrate here. A lot of payroll platforms are built in a bloated way. They have many features, and that makes it very costly. And the end user ends up paying for the features that they don't even use. They're complex because they have to deal with very complicated labor laws across the world in different jurisdictions, and because they serve employees and contractors. And if you ask for crypto, they will send you to add-ons and interfaces that are very complex. We are contractor-only, crypto-native, and we power everything to programmable workflows. I have lived this problem for 13 plus years. I've dealt with legacy payroll systems, and Chris, my co-founder, has built products and shipped 0 to scale. We are raising $1 million to convert our pipeline companies into paying customers, to get more on-ramp and off-ramp rails, our banking partners and licenses, and to also expand into different markets. We are backed by top accelerators and foundations. And we've won with pitch competitions before, and that has helped us grow into the Web3 community. So these communities have opened a lot of doors to give us access to user growth. I'm Titi, I'm the CEO. The payroll may not be sexy, but saving companies $90 billion, that's really hot. Thank you, let's connect.
So much. So you're coming back to your go-to-market strategy. That's totally understandable to start with the crypto-native customers, like given your, the specialty and the focus and the edges. But if you think about the scalability and the mass outreach, that's going to require like a robust fiat and also fiat ramp-ups and also like banking partners. What's your kind of the strategy? How could you think you could bridge between those different types of stages of the customer acquisition and networks?
So in my traction, you see that I have 2 paid customers, which are like direct companies that are paying people. And I also experimented with the white label partnering because we thought that's a very good way to actually enter a market very heavily and capture the freelancers. So the white label is an experiment to see if we can do that, and we actually were able to do that. The Africa gig worker platform has about 20,000 workers, and that is bringing us volume, right? And that gave us an idea that we should actually look into remote-first, contractor-heavy platforms. I'll give you an example, like Upwork, Fiverr, and partner with them, because they are right now using banking rails. If we can provide them a crypto DeFi rail, it'll be very, very cost effective for them. We ran the math a little bit, and the 3% payout can actually even come down to 0.05. But money has to be, on payroll for like a little bit larger time. And that's the advantage that a payroll platform has. Nobody does payment instantly in payroll. You have to fund your payroll account ahead of time. So even if they fund like 2 weeks ahead of time, we have enough time to actually generate yield and make that revenue and share it with the partners.
Thank you for your presentation. I have one question. Do you have any plan to expand your business to Asia or
Yes.
Japanese market?
Yes, I have. And the other partner that I'm talking with, the white label, it's actually for India and one for Canada. And there is a lot of demand from countries like Vietnam, Cambodia, Philippines. So it's just about getting the users from those places. And the way that we're doing is that, and I just tried this like very recently, it's through X Live Spaces. People get very excited to attend those spaces, and I'm very new to it, so I think I'm doing a lot of things that are very new to me. But the response that I've been getting has been tremendous. For example, the last X Space that I did, we got 64 new people that are signing up, and most of them are from the Asia corridor. And I think it's because they have a lot of employers in North America, so I think it's interesting to them. And that's a population that does not need any crypto education. They already know it.
So do you provide like wallet services for the end user? I mean, the person receiving the fund, and in terms of earning yield, is the institution, like the business, earning the yield, or is it the customer, or both? And how are y'all managing that?
Right. So this is a little bit new to me. So in the middle of this year, I was invited by Draper University to come attend a program, and they introduced me to a protocol called Stellar. Like, I knew of them, but I didn't know exactly how the protocol is built, and it has opened so many avenues for me to actually improve my product. So number one, we always ask our users to bring in their wallets because we wanted our users to already be a little bit crypto savvy, because the cost of educating new customers is very strong, very high in crypto. So we thought, okay, let people bring in wallets. But the way that Stellar is built, they have native wallets that we actually can just integrate into our platform. So we're doing that now. It's not live, but we're doing it. Second, the DeFi. The DeFi part is also, we're also leveraging Stellar for that, because we already have existing products that we can just integrate. Instead of us building everything, it becomes very capital intensive. So we're just integrating what they have already available. And we will extend that to the user so that when they create a Stellar native wallet and they keep it in the platform, they can get and earn yield, and we can educate them a little bit more on how they can generate more value for themselves. So Stellar gave us a grant, and we're building through that, and we're expanding through that. And but the idea is to not be chain agnostic and get tied to only one protocol and platform, because in the crypto space, things evolve very quickly, and our ability to survive would be how quickly do we switch between different protocols. So we have that in mind while we build these different things.
Oh, I thought your competitor page was pretty interesting, because one of the reasons you had listed for Rippling being not what you guys offer is too many features, right? But if you think about sort of Rippling's product journey, right? They also start off very simple. But as you grow as your customer, you're going to build out more features, because customers want to go to an end-to-end, all-in-one comprehensive platform, right? So is the goal for you guys to only stay pure play, or are you going to sort of build features around what your customers ultimately need?
I have used Rippling, and I've actually used all those platforms. That's why I listed them out. The way that people work now has changed significantly. Do you know what is J3, J5? People don't have one job anymore. People have multiple jobs. They do gigs, they do side hustles, they do projects, they do so many things, and they expect to be paid for that. And I think the workforce is going to change into people not trusting big tech anymore, people not having the concept of, I'm going to be loyal to this company and it's going to see me through till retirement. That concept is very quickly going away from people's mind. Now it's more like hustle, like do gigs, do works, do projects. And I'm positioning our platform for that kind of a workforce that does so many things, but they need a platform to track all of their different income so that they can deal with the one thing that none of us can avoid, that is taxes. Contractors and freelancers don't even think about paying taxes until it's time to actually pay it. And then they're like, oh, shit, right? Because it's always a lot, right? A lot more than we calculate. So we're building in our platform a way for contractors to see how much taxes they would own in their jurisdiction and the classification of which of these crypto assets is income and which one is capital gains, right? So giving them that insight will make them stick into our platform. And I truly believe that the workforce is going to be doing multiple jobs from now onwards.
Coming from Wells Fargo with so much regulation, compliance, like how do you want to address like fraud and also money laundering, this kind of stuff?
The beautiful thing about blockchain is that everything is traceable. So there's no way you can do money laundering or anything without us having a way and a tool to actually monitor that. Having said that, with contractor payments, that relationship needs to be defined, and relationship is always defined at the beginning of a transaction, not at later, right? So if you're my employer, if you're paying me, you have to tell in the platform that this is my contractor, I'm paying this person for 10 hours, at such a rate. That becomes the definition of that, right? And we track that. You cannot say, okay, I'm going to pay this person the next 1 month and you pay today like a huge amount of money. We question that, like, why are you paying $100,000 now, right? Or why are you paying $10 every day? So we are mirroring payroll very closely, and we are following all the workflows that we know of payroll, right? Like all the different like hourly contracts, milestone-based, all of that. So I think that allows us to be very compliant. We're also licensed, so we do have regulatory overview and oversight that we need to track and report. In fact, I didn't know this when I started a business, but I ended up spending 4 months building compliance tools, and I'm like, man, I don't even know if my idea will work, and I have to spend so much money in compliance. But we did that because in my experience, I have scaled 3 different crypto startups, and compliance has always kind of been an afterthought. So at least for my venture, I thought, you know what, I should do that beforehand so that I don't get stopped when my users are really, coming in, and I'm like, I can't hold them, I can't onboard them because of compliance. And that'll be like a very shitty thing to do. So yeah, I ended up spending 4 months building compliance. So sorry. Thank you so much.
All right, and we got our last pitch of the night. Come on up.
Kumba Noir. Good evening. Bonsoir, that would be in French. Well, my name is John Lombella. I was born and raised in the DRC, Congo, the second largest country in Africa, the richest in the world in terms of minerals, but unfortunately, they're poor. Today, I want to talk to you guys about what we are busy building at Exalio, a compliance-native B2B platform, or marketplace rather, that certainly will be able to make African precious metals like gold and your critical minerals bankable. Well, think of this like your Stripe operating system for commodities, or the Amazon for critical minerals. But before we actually talk about all of that, let's jump into what is the real problem here. Well, did you know that Africa really holds or supplies the most cobalt in the world? And of which, by the way, is estimated to be $24 trillion alone in my country. And gold as well as other minerals, critical minerals, which, by the way, are used for every single one of your devices that you use today, including EVs, the phones, the tools that I'm actually using right now, definitely rely on some of these critical minerals. But the problem we have right now is There's so many billions of dollars in institutional trade sitting on the bench, really outside the financial system, for them to be able to execute this trade. You know why? For one simple reason: compliance. A lot of people think and claim that Africa is difficult and terrible and all that kind of stuff. But the reality is, it's just one simple word: compliance. It doesn't matter where you go around the world. If you don't get compliance right, and Mr. Wells Fargo here, really thank you very much, you won't be able to get access to capital. And this is the reason why we exist today. We exist to make that possible, so that institutional capital can certainly start moving into these flows, and trades actually from Africa are going to start moving from Africa in a compliant way and service the global market. We see policies changing, for example, in the US, where they are building alliances between the US and the African market, of which my country is at the fold as well. So Accelero is at the heart of making that happen. So we can certainly avoid all of these scams, and we can build compliance tools for the broker chain that are causing chaos around the world, for them to be able to improve their ability to identify some of the best deals. Now, you may wonder exactly how big is this market. I mentioned earlier cobalt alone. That $24 trillion that you're seeing right now has been an estimated number for a very long time. I'm not talking about multiple commodities. I'm just talking about a single commodity here, cobalt, which is used for the Tesla car. Without cobalt in the Tesla is useless, probably a bit of shell. And the only thing that will be left is just a piece of AI technology. But hey, listen, we're talking about AI. Well, we also still need AI, certain components from the minerals or rare earth to power the AI infrastructure. All of these are fueling the global demand right now. And we're tapping into a scalable market, $30 billion. That is exactly what we are looking into. We're not just theorizing here, we're executing. What have we done? We have already secured a $350 million contract, 8-year flow of gold offtake. And yes, you may wonder exactly how that works, because the average size deal in these transactions are generally in the range of tens of millions of dollars. And we today, before I mention exactly how much we are asking, think about this one, for example. One offtaker on a 12-month contract at a $10 million, for example, we will be able to net approximately 15% of that. Now, imagine scaling that up to about 10 offtakers. We already have one, and we've signed a $10 million LOI. We're raising $500,000 today for us to be able to execute, to scale our execution, so we can launch our MVP and ensure that we can ultimately deliver this result to the marketplace. Now, how do we make money? Very simple. Just like Stripe, we'll charge a transaction fee. But also right now, as we're kicking off, where the needs and the demands actually matters, gold and critical minerals, we're collecting approximately 15% on arbitrage. But we'll be able to charge every single, at least 1 to 2% flow of transaction coming into the platform. I've got 4 seconds left. Our go-to-market strategy is very simple. We'll activate the compliant rails, we'll onboard counterparties, and make sure that we sell transaction in days and not weeks. My team is rooted out of Africa. We're globally diverse, and I thank you very much for being here. Marketplace first, and remember this: without the mineral, there's no tech innovation. So join me today for us to be able to make sure that we can invest and re-engineer trust. Let's build the future together. Thank you. So say that again? Absolutely. Thank you.
Which side of the marketplace are you focusing on?
Well, that's very interesting. There's two sides of the market. And first of all, thank you very much. I get to see you today. I dropped you a LinkedIn message yesterday. And I'm definitely going to have to follow up with you, and certainly have to grab a coffee with you sometime this week so we can actually exchange. For the sellers market, it's going to be in Africa. For the buyers market, it is global. And global means in the United States. Global means in Japan. Global means in Hong Kong. Because sometimes what I do here is when people come to me from Hong Kong or from Japan, from Tokyo, they're like, hey, listen, can you actually make sure that you can supply at least 100 kilos of gold every single month? That's roughly about $10 million every single month. But that person from Japan or Hong Kong who is looking to tap into the African market has got stashes of cash, just doesn't have the rails or the compliance mechanism to identify the best opportunity and tap into the African market where it's hot today. Everybody is looking to get into it, just don't know how. They don't want to lose money, and for the first time, we're building some rails to make sure they can make the right decisions. So it is pretty much global. We're building it out of San Francisco, but our operational layer is going to be out of Africa because that's where the minerals are, and the global market is essentially focusing on the US right now, and corridors in Dubai are essentially where we are getting customers and engaging with them. Thank you.
That's awesome, but just to start off, are you focusing on the supply side or on the demand side?
Oh, we've done the supply side, and that's our moat. Because if we didn't have the supply side, I wouldn't be so confident to be able to convince actually the global buying community that, you know what, they have access now through Exalio, something they've always wanted for the last 3 decades. So last year, we spent 11 months on the ground, running on the ground in various African countries. I've been on those bicycles that you see on television, for example, in Uganda or Ghana. Well, I haven't been to Ghana, but I mean in Sierra Leone, Liberia, Guinea, and the DRC, to go out there and speak to these people and understand what their worries are, what their concerns are, make sure that we build these relationships. And that's something that somebody in Japan is not going to be able to make happen with somebody in the US as well. So we do that to make sure that now we can turn it into the international community and say, you want access to critical minerals? Well, we've got the solution for you. We've already built the pipeline. It's already there, fully verified. And now we can essentially engage in doing these transactions.
So I'm very uneducated on the African market, but I think it is impressive that you've built the supply chain, because my understanding of sort of the difficulty or why, right, a lot of international buyers are hesitant to basically take contracts from the African market is because of the instability of the supply, right? Even if you have a contract in place, whether it's governmental upheaval, right? Whether it's, you know, individual struggles that local companies may have, there is the perceived, whether correct or not, risk of there being an inability to potentially deliver on supply, right? Like you talked about the supply contract over 8 years. You might be able to get it delivered the first year, but to be able to guarantee consistent scheduled delivery across 8 years, my impression was always that was because of the instability, whether it's regulatory or governmental, right, or business-wise within the African market that made that difficult. So are you able to solve that piece of it?
That's essentially what we're focusing on. And in fact, one of the main issues is this. You have one buyer who eyes out just one country. We are country agnostic across Africa. And that's exactly what we've been able to do, building personal relationship with all these people along the way to ensure that consistency in terms of the supply. Now, we're focusing on the ASM. We're not interested on the LSM. Let me explain. So the LSM is the large-scale miners. These are the guardrails, the guys who literally do not want to deploy capital to help develop the smaller guys, the ASM, which is the small scale, or the artisanal small scale miners. We focus on these people who represent about 80% of the mining community, and yet they are responsible for at least 20 to 40% of the global export. So we are going there, and as we go on our journey, on our roadmap, we want to be able to start walking along with them and start deploying capital so we can predict accurately how much supply is needed for me to provide Tesla with what they need, for example, and how much capital should I deploy into that particular mining community so we can extract as much and so forth. And that's not going to be just in one country, but of course, we are starting with one country, and then we are going to expand as we go on.
Okay, so you guys are the counterparty for the contract. It's not a specific, you're not facilitating a contract between a global buyer and a local company. You actually are the counterparty, and then you get the supplies from various different parties?
Okay, so that's a very good question. Now, it depends on which side of the fence I actually find myself in. So first of all, the other advantage that I have is that I don't spend a single dollar for me to be able to go out there and hunt for these people. The broker market is actually pretty big, and they reach out to me, including the buyers themselves, because they know what we are busy doing right now. So what do we do as counterparties? So if I want to be able to, if I want to intermediate a transaction, not only do I increase my arbitrage, but I then position myself at a place where I literally are putting the contract together. I become the buyer on one side, and I am the seller on the other side. Or if I just provide a platform where the buyer knows that particular seller and they want to decide by themselves, I just take on the transactional fees. So I've got a business model for all scenarios, for all the counterparties, from broker, from capital allocators, traders, sellers, and the buyers, and so forth, and potentially the logistics as well, including government, at a time when we want to provide them with the tools to show them how well we are tracking all of this data that one day can be analyzed, implementing tools like AI and so forth. That's it. Arigato. Thank you very much.
All right, thank you. We had such amazing pitches, so now we'll have all our judges deliberate. So, and then whenever they're done deliberating, we'll announce the winners. So thank you all for coming. Yeah, in the meantime, feel free to talk amongst yourselves. And yeah, so thank you again.
I missed two of them.
They're like ones that really rose above the rest.
All the way to the club.
Hello, one sec. Hey, everybody, we're going to announce the winners. So give us your attention for like a couple seconds, and then you can get back to networking. So I have Belmer from Wells Fargo here. He's an amazing judge.
Hello, everybody. We have a winner. So we deliberated among many different things, and we had like a really thank you to all the presenters, like a really good job in presenting many different business models, different ways to tackle the opportunities out here. We have as the best presentation, like you mentioned, like it was a really great presentation, Axalia. Like, and also we have several runner-ups in terms of like a category around go-to-market. Like we had like a very good results, like in terms of like we liked Numis and Oris, but the main winner tonight is, hope I say right the name, Dolphinze. Thank you very much.
All right, we're going to get everybody on stage, all the people who presented and all the judges, just to take a quick photo. So everybody on stage. We have this amazing photographer, Kevin. Kevin, do you want to say a few words about this photo that you're going to take?
Yeah, Larry. Get back on.
Okay, let's rock. Let's rock. That's amazing.
Hello. We have a all right. Give me one second. We have a winner, so she's gonna give me a couple of minute introduction. I'll give you the mic.
Thank you so much. It was very tough. I thought the others were much, much better than we are. But I think you all agree with, we don't have one job anymore. All of us have to hustle every day. So J5 it is, guys. My platform is live. Please go to my platform, sign up. You don't pay anything in my platform until you actually start transacting. And while transacting, if you think 3% is too much, talk to me. I will show you how to do yield and bring those prices so low. Whether you're a business or whether you're a freelancer contractor, you can make money using our platform. You don't have to submit to inflation. You don't have to submit to bank fees. Sorry, banker guys. I was in banking too. So no hidden fees, no delays, because that's how it should be, right? Who cares about all of these systems, right? I just want to work and I want to get paid. I want to get paid now. Thank you.
All right, let's get everybody on stage. All the judges and all the pitches. Yeah, all the people who pitched today. We're gonna do like a little photo. Yeah, JCB guys, get on in here. Are we missing any of the pitches tonight? I don't. Helen, you should get up here too. Your startup's in here. I know you're. All right, where's Kevin? Kevin, are you gonna take our photos? Yeah. Oh, he's right there. He's like. All right, thank you, everybody. Have fun. There's still some beverages in the refrigerator. I don't think there's sushi. There might be some seaweed left, but also like there's judges up here, so feel free to